Hello everyone, welcome back to Rice Finance here. And today we're going to go over our third Monday market chat. Now, I waited until Tuesday to do this because the Fed minutes came out today and I wanted to see if they would say anything. Turns out they were a bust, but we'll go over that. And before we go into it, I just want to say feel free to hit that subscribe button or that follow button down below. I'm trying to get to 100 subscribers, I'd really appreciate it. Thanks. Um, I ended up creating a new format for this Monday market chat, and I think I'm going to use this going forward. Let me know if you guys like it in the comments below. Basically, I feel like all of these ticker symbols fully encapsulate the stock market as a whole and could provide us with better idea of where the market's going. So let's dive right into it. First, I want to go over the Qs. So as you can see, over the week, it was sitting around 376. Then it ends at around 388.39. It did go up on a good basis, primarily because of the good news from the bonds. I believe the Qs and the SPY is trailing very well with the bonds. We'll see with that. However, I do see a lot of the indications starting to roll over a little bit, as I was saying last week. So I wouldn't be surprised. I think we have a little bit more we could go up, maybe around the I would say around the 390 era, maybe float around there. I wouldn't expect much more sitting around 393. I would expect to see some sort of a dip. The same kind of aspect goes very well with the SPY. We saw that big 439 bump all the way up to a peak of 455. Now it's sitting around 453.27 and at the end of the day. I highly recommend, or not recommend, I highly see that a lot of slowing down on the indicators. The turning up was kind of going down, but you'll see that a lot of times these markets like to get heated up, then they like to cool off, consolidate. I still expect in the long term these things to kind of hit um, higher indicators. I think that we got some room to grow, maybe at that 455 era for the SPY. But again, I expect some consolidation, but then eventually a continuation of this bullish market since I fully believe we're kind of pushing forward. Okay, let's go right now into the VIX, which measures volatility. Now, the VIX started to turn up at the end of the day today. Um, which is very surprising to me. That actually shows the VIX, for those of you who don't know, measures volatility. It's our volatility index. However, the indicators are pushing up, especially on the DMA and the RSI. I do want to say, though, it is starting to turn up, and the VIX has been at a low for a while now. So I would not be surprised if the VIX starts turning upwards, especially when we have these sort of um, slow periods that we could be expecting in the market. So I would not be surprised if this VIX starts to turn up in correlation because it kind of trades opposite of the SPY and the Q. So the VIX I would recommend taking a look into because I wouldn't be surprised if this starts going up as these start to consolidate a bit. However, I wouldn't be totally bullish on the VIX until I see a breakdown in the pattern for the SPY and the Qs, um, which I'm almost seeing one, but I'm not quite convinced yet until I see sort of a topping out of the market as a whole. So past the VIX, let's go into XLE. So XLE is our oil fund. Um, it measures basically energy. I like this stock because this kind of measures the rate in which oil was going. So as you can see, it was kind of flat over the last 5 days. It actually went down a little bit, um, but the XLE is really cool because it does show that gas has kind of peaked. I would say gas has peaked for the time being. I don't foresee gas going upwards. I will say in the trending patterns, we look to be in a consolidation period of oil, which could be good for your bank accounts, especially for those who have to travel a lot. However, it could be bad for those of you who are invested in any sort of oil stocks. You're going to see these consolidate, especially look at the the moving day average just riding along that and riding on the mid Bollinger Bands. It's going to stay within these indicators. Now, I will say this has sort of been consolidating, so I wouldn't be surprised if I see this sort of consolidate maybe this next week coming up, and then eventually I would be expecting a little bit of a push upwards again because we do seem to have a double bottom here, um, right, 1 and 2. But if it could hold this position right around here, I would expect to see it to go up. If it goes a little bit downward and retouches this 82 and breaks this 82, I would expect a downward trend on oil, which downward trend would be good for your gas tanks. Let's go into bonds. Bonds are really cool. So as you see in the last 5 days, they are on this upwards tear. Bonds have been on a tear. They have been looking fantastic. As you can see, they're just on this upwards tear. As soon as the Fed basically announced they're going to slow down the interest and stop hiking interest rates, we seem to have peaked, which actually I recommend. I can't give you any financial advice because I'm not a financial advisor. However, um, if interest rates have peaked, that probably means that your CDs have peaked as well. So CDs might be something you might want to consider looking into. However, I'm not going to tell you exactly what to do. That's just what I am personally looking into. Um, but as you can see, the bonds seem to be in this upwards trend. And I will say again, a little hot on the indicators. I wouldn't expect a little bit of a downward trend, a little bit of a slowdown because it's been on this upward. But I fully continue to see this unless if the Fed comes out and says something crazy like, hey, we're gonna put in another interest rate. I don't foresee this going down, especially since that bonds as a whole has been kind of lackluster um, this whole last couple years due to the fact of the hiking in the interest rates. So for now, it looks as though bonds have kind of peaked out. But again, just would not expect this thing to consolidate, slow down a bit, and but continue its pattern eventually. Let's move on to silver, SLV ticker symbol. Silver's been on a rise. Silver went from 21.12 to around a peak of 22 almost. Now, silver I'm very bullish on. However, I will say silver seemed to peak, um, um, seemed to bottom, not peak, but seemed to bottom around the 1898. This is forming a bullish flag. However, I see this going down to the 21 70 marker, but this is a bullish flag here. However, as I said, the market doesn't like to leave gaps, so it might need to retrace a bit, gap down, but considering this is a big bull flag, I wouldn't be surprised to see this continuation of this pattern on silver. Now let's go into the gold. Gold is the same thing, kind of peaked back down. Now I have ticker symbol FHYS. I wouldn't be surprised to see if a continuation, a little bit of a consolidation as a whole. Over the last 5 days, they did pretty good though. They were up around 1536 all the way up to 1566. Everything seems to be going up so far. But again, same sort of pattern as a silver. Seems like a bullish red flag is forming. However, expect some sort of consolidation, especially today, as you could see it hit the top of the Bollinger Band on the day chart there. So I would expect a little bit of consolidation and then maybe some sort of a continuation of this movement upward as we start indicating lower interest rates. Oh wait, before I go though, but look at the RSI. I will say this, the RSI, I actually would be cautious now that I'm looking at this a little bit closer. This might be some sort of a fake out because if you could see the indicators here, the DMA is up high. Not high, but I would be cautious of the gold. Let me go back to the silver. Silver a little bit cautious because of the RSI indicators. It looks like a higher. I would almost These do look like bull flags, but I would almost be cautious because they almost look like fake outs. So just be cautious of silver and gold. Let's go into commodities with the wheat and the corn. Well, we were already in commodities, but let's go into wheat and corn. Wheat, as you can see, as a whole has been kind of dying out, which is good for your economy. However, the 5 days been kind of going down. You could see this sort of bullish. This kind of trades inverse of the market. If the market was to go down, typically corn and wheat and commodities tend to go up. They're supposed to be kind of inverses. However, as you could see, corn has been going down really, really fast with a high of around 12.19 all the way down to 5.49. Actually, not corn, wheat. Actually, this kind of looks like a buy eventually. Maybe not now, but I personally will be looking into this because based off of the fact that wheat is at like all-time lows almost, it looks like pre-COVID, if you could see from 2021 all the way back to 2020 around here, the COVID crash. So it seems to be kind of bottoming out here. However, I don't know. Just something to look into. I would expect some sort of a retrace down because there's nothing to stop this from continuing following. This just seems like another fake out, some sort of a bullish run, and then a downtrend backwards. As you can see, it stays within its indicators. Going to corn, I'm assuming it's the same thing. Over the last 5 days, we are looking at a flat sort of symbol. Let's look over the 1 hour. So we're sort of flat on the week, and yeah, again, it's kind of bouncing around, kind of looking like like it had to refill in those gaps a little bit, looking like a little bit of a bullish flag because of the whole market kind of going down. People put their money into this kind of stuff. But again, I would not be surprised if this thing kind of continued some sort of a downwards trend just based off of the fact that we are kind of blowing past indicators um, on the high end, and there's nothing to really stop it from free falling. So that's gonna be it for me today. Overall, some of the market, it was kind of I mean, it was a bullish market, for this week. I mean, mostly all of it was kind of run again by the bonds. I mean, the bonds are the hot topic of the year. The bonds are what's kind of causing this whole entire economy to be very bullish. But again, I would not be surprised if you see some sort of a turnover or some sort of a small consolidation period because all the indicators are kind of peaking out here. So unless if we get some sort of news, I would expect a little bit of a slowdown, which might be time to start looking into investing. I'm not going to tell you to invest in the VIX, but it is something that I will be looking into personally. Again, that's going to be it for me. Be sure to hit that follow or subscribe button if you want any more of these market chats down below. Comment if you have any questions or if you like this new format, feel free to let me know. And thank you guys for watching, and I hope you have a good day. Take care. Bye bye now.